Today, we are gonna talk about a very interesting topic, which is if you are a poker player, are you more likely to be a good operator?
Bet it. Or
You might notice that when people talk about the similarities between poker and real estate, they might talk about table selection or market selection. To me, those are kind of basic concepts. I tend to focus on psychology of different things and some of the meta points between the two disciplines. Hello, my name is Perry Zhang. I'm the founder and CEO of Pallas. Pallas is a Y Combinator-backed startup that helps you invest in real estate syndications passively. I started my career as a software engineer at Amazon, Twitter, and Lyft. And when I joined Lyft, it was 300 people. When I left, it was 3,000. During that time, I accumulated about 7 single families. Then I went into real estate syndication. Currently, I have more than 1,000 units as a operator. I also dabble. I'm an avid poker player. I usually play cash games, home games, relatively low stakes, $100, $300 buy-in. When I go to the poker rooms or casino in Vegas, I also play about $300 to $500 buy-in. I don't play, big stakes like $10,000 buy-in. So that's the extent of my skill set. However, my first point will be if you put a professional poker player, professional in the sense that you know kind of what you're doing, not like the real professional that play in World Series of Poker, and you put a professional poker player against a amateur, right? Or who just know poker for a few weeks or so on, or never learned the terminology or some of the strategies in poker. The professional poker player is going to smoke the amateur in the long run. This is very similar to real estate investing, where if you put a real estate investor that knows what they're doing, such as my real estate business partner or a lot of our customers, that person is going to smoke the average Joe in real estate, even if they are successful, even if the amateur is successful. Now, why is that important? It's important because in the last couple of years, amateurs were winning in the world of real estate. Similarly, in short enough of a time horizon, amateurs in poker could be winning and they could win against the pros. And so it might make them think that, oh, wow, I know everything about poker or I know everything about real estate, but that may not be the case, right? And so the way to judge whether someone is a good poker player, actually on a poker table, it's actually really easy. It depends on the size of their betting, the way they bet, the way they call, the certain hands they lay down. It's very easy to see if they understand the mechanics and be able to be creative after knowing the mechanics. Similarly, in real estate syndication, there have been big winners between 2018 to 2021. Is that because they're really good or because they just got lucky? If someone really knows, and the people who really know about real estate, the people I can think of will be like Brian Burke, right? Joe Fairless. These people have gone through the many cycles and have a deep knowledge of real estate syndication. And if you put those people against, the people who just became an operator, the experienced folk is gonna smoke the amateurs in the long run. So that's what I would say. So just know that skills matter in poker and in real estate, and it may not be visible to someone, but if it's not visible, it means you don't have the skill set. Okay, so that's what I will say. The second one is I think that good poker players tend to think in terms of distributions, and that real estate investors also think in terms of distributions instead, as opposed to just black and white thinking. So a common question someone who may not be well-versed in poker may ask is, should I always raise with pocket aces? Should I always raise in this situation, and so on? The answer is yes, most of the time you should do X, Y, Z. But instead of thinking it's unilaterally always do X or Y, you want to think in terms of the probability in a set of all distributions. What will be the chance that they have this hand? What is the chance they have that hand? If they have that hand, will they have act accordingly based on the hand that has transpired, right? So say you are on the turn and there's the pre-flop, the flop, and then they bet again, they check on the turn. What happened? What hand could lead to a good explanation of what just happened? Now, there's never a single hand, right? There's always a distribution of hands with varying degrees of probabilities based on what you know about them and based on just what a logical person would do. Similarly, in real estate, when an operator presents a business plan during a webinar, that plan will never be 100% correct, because the actuality, when they close the deal, things happened. Business plan almost is 100% not exactly correct, and it should not be correct. What's the probability that business plan could go wrong? And what's the probability that the operator can respond to adversity, right? And so a lot of times in business and in poker is almost a microcosm of business and life, to that matter. It's about risk mitigation. It's about out of the 100 possible scenarios, what are the chances that things could go really, really bad? And what are the chances that things could go average well? And what are the chances they could go spectacularly well? You play that game of distributions. So for example, when I do a real estate deal, I'm not saying, or I'm definitely not claiming that it wouldn't lose money, knock on wood, right? What I am claiming is that we have taken steps to mitigate multiple risks, such as interest rate, such as a bridge loan, and such as our expenses are budgeted higher than our competitors, and such as that we raise extra money so that in case a renovation budget exceeded what we planned for, we still have a cushion. It's that ability to mitigate the downside. When you are in poker, every bet, every raise, every call you do is a judgment of risk and judgment of distributions. So a good poker player tends to think in distributions and not so much in like binary decisions. Okay? And then also on distributions, I also want to mention one more thing, which is, this is a fascinating topic, which is the outcome does not make a decision right or wrong. You actually have to, when you do a post-mortem, you actually have to think from whether the decision at the time was the right decision, regardless of the outcome. So to give an example, on the flop, you flop trips and someone goes all in, you call. That was the right decision. They have a flush draw, they end up making the flush on the river. Was that a bad decision? No. You made the correct call, right? Similarly, in real estate, you will make certain decisions that may actually not be correct at the end. Like quote unquote that in the world of distributions, you got it wrong because of that 5% chance that you got it wrong. And you got it wrong. And so, but in retrospect, what did you learn? The learning should not be, I'm bad at decision making. The learning should be, how bad was that outcome? If it's very, very painful, I should probably allocate more consideration to an extreme black swan bad outcome, right? If it's not that painful, then you're like, okay, I'm willing to live with the results and I will keep making that decision because in the long run, this is going to be to my advantage. You see the difference there? All right. So the third thing that good real estate poker players and good operators have in common is the following. And this is a joke. It's the idea of absolute value thinking instead of relative value thinking. Let me give you an analogy. So this is an example. Actually, my friend told me that I told them that a couple years ago, which is 2 years ago, the economy was great. It's really hard to buy any apartment complex.
It's very expensive.
It's very expensive.
Everything is like overpriced. Everything makes no sense. It's all overpriced. People can get kind of down because, prices didn't make sense. So once in a while, 2 years ago, there will come a property that just like, it looks really good, but it's actually not that good. It's just better than the properties at the market at the time. They equate that this is almost like you have an hour of bad hands in poker, right? You just don't get good cards that night. And then all of a sudden you see your cards and it's like Jack King offsuited. And you think that this is the best hand ever, right? You're like, okay, I don't have good cards tonight. So Jack King offsuit, I'm gonna bet, raise, and go all in. And sure enough, by doing that, you could potentially lose all your money. Because Jack King offsuit, objectively, in the absolute value sense, is not a good starting pre-flop hand, right? Ace King is a great hand. Jack King, if you do all the math, it leads that most of the time, it's actually not a strong hand. And the people that are gonna call you and call you down are probably gonna have a better hand than you do, unless you get lucky. So that is a classic example that don't let your decision be swayed by what just happened the last hour or the last year or the last like 20 properties that you looked at. 2 years ago, you might be looking at 20 properties and none of them make any sense. And then you come across a decent one and then you start pulling the trigger and you start become undisciplined because they're like, this is better than anything I looked at in the last 20 deals. Let's go, go, go. But that's the time that you need to become disciplined and look at the objective value of that property and that hand. Jack King offsuited. In this case, you should still be disciplined and be willing to fold. Similarly, in today's market, there is talk about recession. There's talk about that economy is gonna get worse and you don't want to buy anything because it's like a falling knife. And I will offer a similar advice is that, are you tainted by what just happened and what's on the news for the last few weeks? Instead of looking at something objectively. What is objective, like judgment? It is if you buy something for $125,000 per unit and it's renting it for say $1,150 a month. That's objectively a good deal, almost regardless of interest rate, right? This ability to know what is a good hand or what is the right thing to do, regardless of kind of the backdrop of economy, is, in my opinion, one of the very valuable or most valuable skill sets that an investor or a poker player should have. This is actually maybe another way of paraphrasing, Warren Buffett, which is be greedy when people are afraid and be afraid when people are greedy. I actually think that it's not doing opposite of what people do. It's being consistent about what you do. It just happens that the world is always in the extreme spectrum. So being consistent with what you think is right, it turns out that you are almost always contrarian with what people think. Because you are most stable in your judgment. And it just happens the world is just always up and down in terms of their judgment. And so what happens is that you always seem like you are greedy when people are afraid, and you're always afraid when people are greedy because that's your judgment. And Pallas, is actually named after goddess Pallas Athena, which stands for wisdom, independent thinking, and strength. So I really want to impart that, which I could find in poker is not be swayed by, how hot you are running that night or how lucky you were on that. Always go back to what is the absolute intrinsic value of something and what's usually the right thing to do. Now, obviously circumstances will vary and so on, but it's important to have a basis of value. I hope you enjoyed this kind of video, and if you like this kind of video, make sure you subscribe and comment below what other similarities you see between poker and real estate. Again, thanks for watching and happy investing. Bye-bye.